to show you this right now. So I sent this into the private Discord. Okay, you guys see this? Look what happened today with these the FOMC tool, okay? Okay. Because of what's happening with the tariffs and how equity markets are reacting, the Fed still has interest rate cuts in their back pocket. Okay. Another bit of confluence as to why I believe that this isn't going to be a recession, because we still have tools at our disposal if Jerome Powell uses them to his best ability and actually takes action quickly, not too late, when it's too late, and starts cutting rates quickly and ending QT, end it fully, markets will start to move again. So look at this. I just said this in a couple. We looked at this actually on Monday. Already since Monday, the percentage chances for interest rate cuts coming have shot up. So we went from likely 2 cuts this year up to 4 cuts. 4 cuts. Huge. We cut 4 times this year. Incredibly bullish once again. Why? Because low cap companies can now borrow money at a lower rate. Banks can borrow money at a lower rate. Individuals can borrow money at a lower rate. Cheaper capital, more borrowing, more spending, economy grows, companies grow, bullish for risk assets, more money in the financial system. U.S. starts to cut interest rates. What happens to global M2, monetary supply? Starts pumping even harder than what it is right now with China. China, like fucking Trump says, right? China. So look at how this percentage chances of cuts are pumping right now. So now on May 7th, 2025, which is the next FOMC meeting, we're already up to a 32% chance, 33% chance that we cut down to 4 to 4.5 basis points. Okay. June 18th, it's basically priced in. Yeah, we're going to get a cut on June 18th. On June 30th, it's likely, right? And this is how you know that it's likely that we get 4 cuts. So if it's in blue, that's the most likely scenario to happen in that meeting. So they're saying most likely on May 7th that we keep the interest rates the same. Okay, so no cut. But it's most likely on June 18th that we get an interest rate cut. And then look at this. It's most likely on the very next meeting, June or July 30th, we get another cut. And then it's most likely on September 17th, the very next meeting, we get another cut. And then here, December 10th, 2025, most likely in this one. So look, this one, it's likely that stays the same on this meeting. This meeting, it's most likely that we get another cut on December 10th. So 1, 2, 3, 4 cuts are now going to get priced into markets. 4 interest rate cuts. That's huge. Understand the implications of that. It's because we're trying to forecast long-term what's happening here, right? We can't control the local price action with what's going on with tariffs. Yeah, equities are down, crypto's down, etc. Okay, what are we trying to figure out? Are we bottoming, or are we going into a deeper recession where things are going to get much worse? Well, now the fact that they're going to start pricing in 4 interest rate cuts likely this year. 1, 2, 3, 4. Bullish for risk assets. Cutting interest rates is bullish. This is why in 2021 we got this massive blow off in equities and in crypto, because interest rates were almost at 0 because of COVID. Monetary supply, M2, global liquidity, increased by 40%, therefore injecting all this liquidity into risk assets, and this huge inflation took place. This is what we're looking at right now. So what Trump's doing with the tariffs, yeah, locally it hurts. Locally it looks bad. Locally it's blood. But longer term, he's making the right play. Why? Because by completely resetting the stage with global trade, he's going to bring so much more money, investments, liquidity, economy back to the U.S. Money's going to flow into American citizens' hands. What kind of money? U.S. dollars. You make the American people, American businesses, American investors richer. Guess where they're going to put their money? U.S. equity markets. It's a long play, okay? He is making the right play long term. It is the right play. Everybody's crying, screaming, tariffs, Listen, dude's a multi-billionaire businessman, deal maker. He knows what the fuck he's talking about. He's not an idiot. I would take his business acumen and his business sense over literally every single other politician in the Senate and in the House. He's the most successful businessman. So wouldn't I want to take advice from the person I want to be most like? Yeah. Hey, Donald Trump, if I take business advice from you, if I take negotiating advice from you, would I become more like you? I wouldn't. Beautiful. I'm going to take his advice. So he's setting up the stage for a massive rip later in the year and the following, while sacrificing local price action, understanding that the long-term effects of these tariffs are going to provide more liquidity, more prosperity, more money, more spending within the U.S. economy and the U.S. country, right? You're bringing all this money, all this business, all this investment back into the nation. Yeah, after we get through all this bullshit price action, we're actually going to rip even harder because interest rates are going to be that much lower. That much more business and money is going to be flowing into this country, which is then in turn going to flow into what? Risk assets. Genius. So that's what we're looking at macro. So 1, 2, 3, 4 interest rate cuts now, up from 2. It went from 2 to 4. Huge, doubled. Okay.